Economic downturns are pretty much inevitable as time goes on. Unexpected times of crisis, like pandemics and wars, arise, causing drastic changes for everybody across the globe. Is there anywhere we can invest our money in during these times, while still putting food on the table, while you're waiting for the light at the end of the recession tunnel to appear? Here are 8 ways to stay the investing course. Welcome to Upside, where we have fun facts for curious minds. To enjoy more of these videos, don't forget to hit like, subscribe, and ring the bell. At number 8, core sector stocks. While it may be tempting to abandon stocks when the market gets volatile, you shouldn't give up on investing during a recession altogether. In fact, it is the best time to buy more stocks. Knowing which sectors that can outperform the stock market can be done in a smart way if you understand and observe the phases of the business cycle. So if you want to insulate yourself during a recession partly with stocks, consider investing in the healthcare, utilities, and consumer goods sector. People are still going to spend money on medical care, household items, electricity, and food, regardless of the state of the economy. As a result, these stocks tend to do well when the market is in a down cycle. You can also invest in exchange-traded funds. An exchange-traded fund is a basket of securities that trade on an exchange, just like a stock. ETF works like this. The fund provider owns the underlying assets, designs a fund to track their performance, and then sells shares in that fund to investors. Shareholders own a portion of an ETF, but they don't own the underlying assets in the fund. Even so, investors in an ETF that tracks a stock index get lump dividend payments or reinvestments for the stocks that make up the index. ETFs are designed to track the value of an underlying asset or index, be it a commodity like gold or a basket of stocks such as the S&P 500. Now, since we mentioned the term index, let us focus more on S&P 500, which is a stock market index that measures the performance of about 500 companies in the US. It tracks the market capitalization and measures the value of the stock of those companies. So, while you can't buy S&P 500 stock, you can buy shares in an index that tracks the S&P 500. In fact, this is one of the best ways for beginner investors to get their feet wet in the stock market. Moving on, let us continue with NASDAQ. NASDAQ is a global electronic marketplace for buying and selling securities and is the second largest stock and securities exchange in the world. All of its trades take place electronically through dealers rather than in a physical location directly between traders. Did you know that NASDAQ was the world's first fully electronic stock market in 1971? In general, NASDAQ attracts more tech and growth-oriented businesses than other exchanges. Major stocks that trade on the NASDAQ include Apple, Amazon, Microsoft, Facebook, Tesla, and the like. Because it attracts highly growth-oriented companies, its stocks tend to be more volatile than those on some other exchanges. Reliable dividend stocks at number 4. Dividend stocks generally withstand recessions better than other stocks. With dividend stocks, your return comes from both share price appreciation and the dividend you receive. For example, AT&T has a dividend yield of about 7%. If the stock gains 5%, the total return you'll get is 12%. Meanwhile, if AT&T stock loses value, you will only suffer a loss if the value of the share drops by more than 7%. Upside trivia: did you know that when a dividend stock price falls, its dividend yield increases? The stock thus becomes more attractive to investors. You know that to make money with stocks, you need to buy low and sell high. By buying quality dividend stocks when prices are low, you can profit from a future rebound while earning an extra income as you wait for the rebound. And when you receive a dividend payment from a stock that you own, the company has decided that you, as a shareholder, will benefit more by receiving a portion of the firm's net income than the firm would gain by reinvesting that money back into the company. That's the reason fast-growing smaller companies typically reinvest profits back into the company, and older firms with fewer growth opportunities are more likely to pay dividends. Halfway through our list, real estate. When the stock market is doing poorly, investors who are looking for other opportunities find that real estate is a safe haven. It's somewhat counterintuitive, but recessions don't necessarily mean bad things for the housing market. In fact, they usually don't. An economic slowdown may be a reason to buy real estate, since this investment speaks to a variety of investors' needs, including diversification and income generation. So, it is important to understand the value of property investments in a portfolio during a recession. People will always need places to live, work, and access services even during a recession, which means that the market will continue to exist. One of the primary reasons to consider making property investments is the opportunity to generate income. The consistent or predictable income from rental properties is what makes investment real estate ideal during an economic recession. If you can rent out a property to a reliable tenant, you'll have a steady stream of income while you ride out the recession. Once real estate values start to rise again, you can sell at a profit. Next up, you can also invest in precious metals. Countless civilizations have built their economies on the solid foundations of gold and silver bullion. The exchange rate between the two metals dates back to as far as 3000 BC. In recessions, wars, and the many different types of economic turmoil, each metal will behave differently. Gold, the 5,000-year-old tried and tested sound money, is typically the first choice of investment. Although it is used in electronics, the bulk of the demand comes from its safe haven appeal, as shown by the buying activity of central banks in uncertain times. In 75% of all market recessions, the value of gold has increased significantly. Historically, the value of gold is sometimes initially pulled down at the start of a recession. However, it is realistic to expect that in most cases it will bounce back and increase in value throughout the recession. History states that this point may be a fantastic buying opportunity. The best time to invest in gold, silver, platinum, or palladium is when the stock market is strong and precious metals prices are weaker. Investors are then in a position to reap the benefits of a downturn. And of course, the most important investment, invest in yourself. Investing in yourself may be the most profitable investment you can ever make. It yields not only future returns, but often a current payoff as well. The surest way to be productive during a crisis is to place a priority on investing in your personal growth. The effort you put into consistently investing in yourself plays a large role in determining the quality of your life now and in the future. Books or audiobooks are an awesome resource to build your knowledge and expertise in any area. Famous motivational speaker Les Brown said, "If you read one book per month in that area in 5 years, you will be among the top 5% of experts in the world." Upsider goal: read 1 to 2 books per month in a particular subject you are interested in. You can also join online seminars and workshops to expand your knowledge and skills in your business and/or personal life. This will give you the opportunity to meet and interact with individuals who are like-minded. Taking care of your health also counts. Eat right each day. Fuel your body with whole organic foods, nutrition and herbal supplements, and clean spring water. You will feel better and have amazing energy. Investing in yourself physically and emotionally will allow you to become the best version of yourself. So what are your thoughts on investing? Will you invest your money during the next recession? Let us know what you think in the comment section down below. Upside will be responding to all of you who comment within the first hour. And for all you Upsiders who want more Upside videos, don't forget to hit like, subscribe, and ring the bell. If you find this video informative, we know you'll be interested in watching our video on how to make money online when the world is shut down. See you next time!